Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to talk about Bitcoin and we're going to be looking at on-chain metrics as well as the price. So if you guys like the content, please go ahead and subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. Let's go ahead and jump in. So we like to talk about on-chain metrics from time to time just to see, how things are going from a slightly different perspective than just looking at the price and the price alone. So what we're going to do is we're going to systematically go through some of these on-chain metrics. So the first thing we're looking at is the hash rate in terahashes per second versus time. One of the things you notice, of course, is that as we continue on, every year, it's going to become harder and harder to move up orders of magnitude. Okay, so and we've seen this already back from 2010. We were at around 10 to the minus 5. We moved up to around 10 terahashes per second by 2011, and this was only a year apart. Then by 2015, we had moved up to 10 to the 5, and then by 2020, we're about 10 to the 8 or so. So you can see that in terms of the hash rate, the growth is slowing down, and this of course makes sense. Now, if we just put on the halvings, just to give you an idea, you can see that after the first halving, the hash rate went up almost instantly. Okay, and this is one of those things that I get a lot of questions on the channel about, about the hash or about the halving and whatnot, especially as it relates to either lengthening cycles or the Fourier cycle. If you follow this channel, obviously you know that I lean a lot more in the direction of lengthening cycles rather than the Fourier cycle. And part of it is recognizing that each halving, it likely will have less and less of an impact on the price. And one of the things you can look at is you can just simply look at the hash rate in terahashes per second. After the first halving, you can see that there was an almost immediate increase in the hash rate over the next few years. After the next halving in 2016, the hash rate did not go up at quite as quickly as it did back at the first halving. And then after this halving, you can see that it hasn't really changed a whole lot. And even recently, it's actually dipped down a little bit. If you look at the very end, it has dipped down a little bit. Now, if we zoom into this region, one of the interesting things is that the hash rate has actually dropped fairly significantly over the last few weeks or so. So you can see that in October, it reached all the way up to 1.6 times 10 to the 8th terahashes per second, but it's actually dropped down to 1 times 10 to the 8 terahashes per second in a relatively short period of time. There's been two other times recently where we've had drops this significant or on this level. One was back in March of 2020, and then the other one was in the summer. And if you overlay the price of Bitcoin on the secondary y-axis and put it on a linear scale, you can see that this hash rate drop was slightly preceded by a drop in the price of Bitcoin. So the price of Bitcoin started dropping first, and then following the drop of the price of Bitcoin, then the hash rate decreased. And this is probably a lot of miners capitulating because, at some point they can no longer be profitable, and it basically just keeps it moving. You get the ones that are profitable, they close up shop, and the ones that have the latest and greatest tech that can still maintain a profit all the way down here, or at least survive long enough to instead of having to sell their Bitcoin right away, survive long enough to realize a profit later when the price goes back up. So you can see this was accompanied by a drop. So the price of Bitcoin dropped, and then the hash rate dropped thereafter. Now, in this situation, back in the summer, the hash rate dropped when the price of Bitcoin started moving sideways for a few months, and it moved sideways for approximately 2.5 months at this point. Now, we really started dropping around this level, but interestingly enough, the third option happened, right? So in this scenario, the price went down after the hash rate dropped. In this scenario, the price just went sideways after the hash rate dropped. And in this scenario, the price went up when the hash rate dropped. Now, if we take a look at more of the macro scale, this shows the hash rate in terahashes per second against time with a secondary y-axis of the price of Bitcoin, and you can see, more or less how it ebbs and flows. The first peak of the price of Bitcoin back, all the way back over here before 2012 occurred, and then shortly thereafter the hash rate leveled off for a few years. And then at this peak in 2013, the hash rate continued to increase for a little while before leveling off. And then at the following peak in 2017, the hash rate basically just kept slowly increasing and then has finally started to level off again. So each time we have a peak, there essentially is a delay in like a response of the hash rate looking at the macro scale. Now, one of the things we can do, of course, is to plot the price of Bitcoin versus the hash rate with a color-coded time dimension. And it paints a really cool picture because you can see as we move forward through time, we know the price of Bitcoin has gone up, but also the hash rate has continued to go up somewhat commensurate with the price of Bitcoin. Now, there's some interesting charts we can look at. If we look at the hash rate in terahashes per second divided by the price versus time, we get a pretty interesting chart. And you can see it generally goes up significantly early on, levels off, and then it quickly goes down during a peak. And the reason is because you're dividing the hash rate by a larger and larger number in the price, and therefore because the price is rapidly exploding in this regime, you're essentially going to get a smaller number since you're dividing by a larger number. So that's where it comes all the way down, and then we had it obviously come all the way back up. And this was 2013, by the way. The first one was way over here, which wasn't as significant. So we have 1, 2, 3. So one of the things you can notice is that it seems like these are getting longer each time. So we have 1, and then 2, and then 3, and then now I think we're in the fourth one. We're in the fourth one, and you can see that this has actually started to go down recently, but it makes sense because for two reasons, right? Because first of all, the price has been going up, and you're dividing by a larger number. Therefore, you would expect the number to be smaller. However, the hash rate has also been decreasing as we showed. So we're taking a smaller number and dividing it by an even larger number, and that's why this has been going down as quickly as it has. I do not think we are in this phase, right? The last few months of a cycle where it goes all the way down to the peak. We're probably more in one of these earlier phases, and we still probably have a long way to go. You can see the one in 2019 was pretty substantial as well. I mean, it dropped down significantly. If we plot it the other way, where we plot the price versus the hash rate, you can see, the price divided by the hash rate. So we kind of form these little balls, and then down again, and then down again, and you can see that each of these, they're getting longer and longer. So first, if you note when it starts moving sideways and highlight that region, and then we have that final blow off top. Again, and I'm just excluding this first one over here because I could have drawn one, essentially right here, and then with this final blow off top. But there really wasn't a great sideways movement in this first cycle just because it happened so quickly. So then we have the 2012 to 2013, then we have 2016, 2017. This accumulation phase, if you want to call it, followed by a blow off top. And then I would argue that we're still in the current accumulation phase of this cycle before this starts to rapidly go up. And you can see that it has gone up a little bit recently, but it's obviously way too early to know if this is sustainable. Now here we're actually plotting the active addresses divided by the price. And I think it is a fairly interesting metric to look at, but actually it might be better to plot the price divided by the active addresses versus time. Let's zoom out a little bit. We can generally see these peaks that form. So we had one early on, and then we had a low, and then we had another one, and then we had a low. And you can see again that these are lengthening as well, and therefore I would expect this next one to even take longer. Note that the growth is slowing down. It's decelerating. We're not going to jump up to like 10 to the 0 or something most likely. It's probably going to jump up somewhere in that regime. Okay. Now if we plot the price versus the average transaction fee. I think it also tells a pretty interesting story. It's kind of hard to see it unless I play it. I'm not going to do that on this video, but if you just kind of follow it through time, it comes up as the price of Bitcoin goes up, the average transaction fee goes up, and then it comes back down. Okay, and then we go back up, and then the average transaction fee goes up rapidly as the price of Bitcoin keeps going up. Everyone's FOMOing into the market, and then we come back down, and then it goes up again, and then the transaction fee goes up, and then we come back down. And so if we continue to repeat this, it sounds crazy, but we could be getting to pretty high transaction fees on the network. So especially if Bitcoin starts pushing towards 100K this market cycle. So just be aware of that. And it's one of the reasons why I don't really think Bitcoin is a future peer-to-peer currency. I understand there's solutions being worked on, but ultimately speaking, I think it's more of a digital gold and something that people are going to want to hoard, being the first cryptocurrency, being the one that has the highest market cap. Probably not going to be something people are going to be, trading in for coffee or something, but something that people are going to really treasure and want to accumulate as much of it as they can. So this gives a pretty brief overview of some of the on-chain metrics that I think are worthwhile to follow, because a lot of these metrics we don't really talk about on the channel that often, but it's nice to come and check in once in a while. Before we take a look at the price, I will remind you that if you guys like the content, you can join the premium list at intothecryptoverse.com. You get access to weekly premium reports, weekly videos, a Telegram alerts channel where I post my candid thoughts on a market almost every single day. I think so far I have done it every single day for the last few months. And then also a risk dashboard, which is what I use to trade. And you can pay with cryptocurrency to get for a 12-month membership if you want a 15% discount. So the final thing we're going to do is we're just going to take a look at the price of Bitcoin. Now remember, in March, this drop here was followed by a drop in the hash rate. Okay, so it was followed by a drop in the hash rate, and it makes sense because you would get some level of minor capitulation where they can't keep up with the prices going down. People can't afford to stay in business, so they just close up shop. And then subsequently, it's beautifully designed, of course, right? So because they drop out, then the hash rate comes back down, and then it makes it a little bit better for people that were able to stay in that market and continue mining. And then we had another drop in the hash rate here, but this was just when Bitcoin became kind of humdrum for a while. And note that this was the time when altcoins started soaring back in this period. In this period too, we had altcoins booming for a few weeks, but that was because, again, Bitcoin was moving sideways at a fairly bullish level. So we've had these three, what I would consider reaccumulation phase. So this was the first one, and it lasted a very long time. A lot of altcoins did very well in this period of time. A lot of people call this a distribution phase. We said, you know what, it looks like a reaccumulation phase to me. Then we had this period, our second reaccumulation phase. However, one big difference between this accumulation phase and this one is that in this one, Bitcoin tested the 20-week moving average, which, as we know, is our bull market line of support. We had several times during the last market cycle where we tested the 20-week moving average. All of these 20 to 30 to 40% drops all found support at the 20-week moving average. The only time it didn't find support at the 20-week moving average was at the end of the bull run, and then once it dropped below the 20-week, the show was over, okay? And now the Bitcoin, because Bitcoin in this region, it tested the 20-week, this was, of course, a time where it made more sense to focus on Bitcoin rather than a lot of altcoins, because when Bitcoin tests the 20-week moving average, there's a lot of skepticism as to whether it's going to hold. If it doesn't hold, a lot of altcoins will bleed against Bitcoin and USD, but more importantly, Bitcoin. And then once Bitcoin volatility starts moving again, it still remains the same, right? You want to focus, not that it's financial advice, historically speaking, when Bitcoin's moving up quickly, that's where you want to be. That's why I always say Bitcoin it will be, and it always, it currently is now, and it always has been, the largest percentage of my portfolio, because if Bitcoin's going down quickly or up quickly, or if it's testing the 20-week moving average as support, Bitcoin is usually where you want to be. But when it starts moving sideways at a bullish level above the 20-week moving average like it did here or up here, this is where altcoin exposure can sometimes be pretty good. So currently we're up at this point, and you can see we had a closing, our weekly close was just south of 14K. We've said before that 14K will likely be a significant area that we're going to have to break through. This was essentially where our local top was back in 2019. And if you look at monthly candles, if we just quickly switch over to monthly candles, you can see that that was where the top of the monthly candles hit back from December of 2017 and January of 2018. So with that said, moving forward, we are watching a, to some level, I mean, the hash rate has been dropping off over the last few weeks. So you might wonder, well, why is the price going up? Well, of course, it could be any number of reasons. First of all, it's just that Bitcoin is very unpredictable in the short term and has a mind of its own. And the market in the short term is a random walk, geometric Brownian motion, I would say. I don't really think you can accurately predict short-term moves. You could also argue that institutional interest has helped pick up some of the slack from, say, retail investors during a time like this. But whatever the reason is, it certainly would not be unheard of course, just from a pragmatic point of view, to see Bitcoin stay range bound in this level for a while. Now, we've always said that at the end of the day, Bitcoin will likely have short-term bubbles along the way, even in lengthening cycles, right? We had one in 2019 that took us from like $3,100 to 14K in a relatively short period of time. It's possible we have another short-term bubble that takes us higher than 14K, but what would be in my opinion, what would be the most bullish for Bitcoin over the long term would be just a continued stay in this regime right here. Because you might wonder, well, wouldn't this be more bullish? Yes, in the short term it would. The problem is that when Bitcoin goes up too quickly, it tends to correct pretty hard back down. So for all intents and purposes, from a multi-year bull market point of view, it's better to establish support at key levels on the way up, so that the corrections, whenever they do come, and they will come, won't be quite as bad. In the last market cycle, all the corrections from the bull market were between approximately 20 to 40%. The only one that was more than that after the bull market had started was the final peak, where it was like over a 50% drop, and it went below the 20-week moving average. So now you can see that the price of Bitcoin from the 20-week is approximately 25% or so above the 20-week moving average. The present time, the 20-week moving average is just over $11,000. The 20-week moving average will also shortly be putting in a new all-time high. So if we measure from the top of the all-time high over there, you can see that the 20-week moving average will be crossing the prior 20-week moving average all-time high of approximately $11,200 to $11,300. It'll be probably crossing that within the next week or so. So moving forward, if we were to see the price of Bitcoin simply move sideways, then this would be in line with what happened last time, where we had a minor capitulation, basically when Bitcoin was moving sideways for a while. However, so far the price has been moving up during this drop in the hash rate. And again, there's a ton of different reasons why that could be, but we'll just have to wait and see if this continues, because you can see we've had, in terms of weekly candles, Bitcoin has been pretty green for the last several weeks. You can see that we've had essentially 4 weeks in a row where the price of Bitcoin has been trending up on the weekly time frame. The current candle is slightly red. That's just because we've moved down slightly since the week started, but the week just started. We could easily blast through this up to a new level, or we could come back down. Note that one of the things we did at the last reaccumulation phase was just move sideways for a few weeks before doing anything from there, right? We just moved sideways for a while. The first accumulation phase was more bumpy, right? It came up and it came down and did something like that. This one was fairly flat, and then once, it was flat for a while, and then it dumped down, okay? There's a lot of different ways we can go. I would say managing, predicting the short-term moves of Bitcoin are impossible. I think everyone watching the channel understands that, bubbles exist in cryptocurrency. That's why a lot of us are here, because we want to take advantage of those bubbles. So if we do see a short-term bubble and this continue to go up, great. However, if on the other hand, we just go sideways for a bit, that's fine. The key area to look out for will be the 20-week moving average as it catches up to the price of Bitcoin. So that'll wrap it up for the video. Please subscribe to the channel, trying to get to 50,000 subscribers by the end of the year. So subscribe to the channel if you guys like the content. Also give the video a thumbs up. And as a reminder, we do have the premium list. If you want access to exclusive content, you can check that out at intothe.cryptoverse.com. One final reminder is if you want to get notified of future videos, you can click the bell icon to turn notifications on. That'll wrap it up for the video. Please subscribe, and I'll see you guys next time. Bye.